Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Thank you for your patience. Having a few technical difficulties this evening. Hopefully they've all been rectified. So tonight's webinar is Forex trading live market analysis. That's what's coming up in a moment, just to give you a heads up of everything else that's coming up from me this week. Tomorrow I'll be going through the 4-hour trade entry, position trading using the 4-hour charts. That's tomorrow's education webinar, 8 p.m. Sydney time. And more analysis from me on Thursday, 8 p.m. Sydney time. So before we get into it, if you can read through the disclaimer for those people on our YouTube live stream, I cannot see the chat. So I've given you the link. You can come and join us in the webinar if you want to talk to me. And hello to you, Azu. If you have a question and you're in the webinar, then just put your questions to the webinar chat or the question and answer box. I will see them coming in. So everybody, please just read through the disclaimer. And just looking at the names on tonight, if you're new to the webinars, welcome. So if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities, and I'm a full-time Forex trader. I've been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. Just send me an email if you want to contact me. Through the week, you can connect with us at our website. Go to acy.com, go to the Market News tab, or our YouTube channel, ACY Securities Australia. If you want to connect with me personally on my handles, there, I've got Twitter and LinkedIn there. If you head over to one of those, you'll get my analysis that maybe I'm putting out on the weekend that you may want to follow. Just go over to Twitter, you'll easily be able to follow me there. And through the week, if you want to get access to our Telegram channel, just contact nathan.bray. I'll put his details in the chat for you. If you want to get access to my MT4 chartlets and templates, then just contact Nathan. He will organize that for you too. There we go. That's in the chat. All right, so let's get into it now. First up, we'll look at the news for the week, or the big events for the week. So just double checking everything's refreshed. It is. These times are my time, quiz and time. So 8:15 p.m. we've got monetary policy report hearings from the UK. Not a red event, but that's just coming up next. 11:30 p.m. we have Canadian CPI, so that's inflationary data coming out. So that's going to definitely affect the Canadian dollar and Canadian crosses. In the morning, 5 o'clock, we have the FOMC meeting minutes. That will definitely affect the market. So ahead of then, we may well see market range bound. 6:35 tomorrow, we've got the Aussie RBA Governor Bullock speaks. And then on Wednesday, 11:30 p.m. US, unemployment claims. And just flicking through what is coming out on Thursday. Thursday looks like it's the flash service and manufacturing data releases from countries, which is usually the Eurozone, the UK, and the US. But the US data is not coming out until early morning Saturday. So just head over to Forex Factor and Review. So really the big one for today is the Canadian CPI data that will affect the Canadian crosses. So it's a bit of a lighter week of data after last week. All right, let's get into the charts now. What we are definitely seeing is another sell-off of the US dollar. This is the weekly chart. Just drop to the monthly chart. I've just got the fib drawn across the range from the higher top to bottom. And, you know, we're at the top of the range, closing right up here at last month. We've already managed to move down halfway of the range. So we've had very poor job figures, decreasing inflation figures from the US. Those are the two things that have driven this move. Is it a change in trend? It's too early to tell from a monthly perspective or a weekly perspective. Could be that we're just pulling back to the 62% level or the 79% level to put in a higher bottom. We'll have to wait and see. All right, same. Well, the weekly chart has put a minor lower top in here because it was an outside week there, so it's a little bit ambiguous that. And we're just trying to hold below this weekly high. So all the weekly highs that we've moved above, we're back below them all at the moment, 103.65. So it doesn't look too strong at the moment. And the day chart's just showing you a downtrend. It is overextended, so it wouldn't surprise me. In fact, it wouldn't surprise me to see price actually come back and fill in this area that got formed last week after the CPI data release, I believe, was that day. All right, there's definitely an imbalance in that area that has not been filled, so it wouldn't surprise me to see the market come back to that area. So it's worth noting. All right, S&P 500, we're most definitely, just to the monthly chart here, getting back up to a little bit beyond the 79% of the major range. And the weekly trend is up. We're just getting back up to very high selling levels from previous weeks or months. So I'm sure the air there will be quite thin for the buyers. Doesn't say price can't continue up. Maybe the market just thinks now that at some point next year, the US will now be cutting interest rates. That's good for the stock market, theoretically. And that's why the stock market's going up. Of course, price of the stock market is driven by earnings, but at the moment it's also been driven by the idea that, of course, earnings could rise now because borrowing costs at some point next year are going to, reduce. All right, now to the day chart, it's overextended. Really, if we're going to continue up now, based on the day chart uptrend here, you'd probably want to at least monitor the last range that's being formed for a pullback within it, because that's overextended. I wouldn't want to be buying up here at these highs to the left. I'd need to be monitoring, first of all, a pullback to 62 to 79% zone, that area. All right. This is way overextended. I'm sure traders are going to be starting to take profit and we'll see a pullback. I mean, it doesn't have to pull back, but I don't think it's the area where you want to get in for a buy at the moment. If you want to get in for a buy, you need to wait for a pullback. We are at such high levels, maybe you need to be looking for the first lower top, lower bottom, or at least the first lower top to form, maybe for an opportunity short, which we're not seeing yet. All right, let's get into the euro dollar, which has been moving up very strongly. That was the CPI, that day there was the job figures. Then we had an inside week down. Then that was the CPI data on Tuesday. And we haven't filled in any imbalance that's formed in there. And we're into a new week up this week. Now we are today hitting the 62% retracement of the monthly range. This range here. Now that has moved down and broken below a monthly support area here and a support area here. Folks broke that area, but it broke it. So theoretically, the monthly trend here is down. I'm classing that as a lower bottom to these bottoms. So, we could be coming up to form a lower top from this move down within the upward move that we're seeing on the day chart. And I see you're saying the market's been hard for not letting you get in on a pullback. Well, yeah, the market's obviously getting repriced because of data released last week, and no, it's not pulling back too much. So the kind of logical levels that you would normally, tools that you would normally use for logical levels to look for a pullback to, they haven't been coming around, which, it's annoying, but that's trading. All right, so what we are seeing, the weekly trend here on the using the significant highs and lows is down here on the euro dollar. Maybe we're coming back to this weekly high here at 110.12. The monthly high up here at 110.95. And as I said today, we are today touching the 62% level. So we've been up to 109.64. We could get to 110. I think if we get up to 110, for sure, that would be the area where we've previously seen selling pressure. You can see here at the 110.12 area, we broke below. We topped out there a number of times on daily candles to move down in this move down. So that would be an area to watch. This imbalance here remains in play. It's not wanting to come back and fill that imbalance at the moment. Filled the job figures imbalance here, pretty much a good 90% of it, but this one hasn't been really filled. So at the moment, the trend remains up. So if we remain in trend on the 4-hour chart, I will just be watching for logical retracements on the 4-hour chart. Wouldn't be trying to have the fear of missing out and getting caught at the top. 62% level overlap to 108.79, a previous resistance level. That's a previous monthly resistance level. It was held there last week, but now we've moved above. So that would be an area of support to watch, I think, if we could pull back. Very difficult at the moment when the market's not pulling back. With it being so strong, if you dropped your 15-minute chart, you'll see that yesterday we couldn't get back to central pivot point. We may only get back to central pivot point, and there's a day support level there too. So that would be the short-term intraday area to watch today if strength remains strong. If it remains strong, we won't move too much below the central pivot point. So that would be an area to watch intraday there on the euro dollar. But I say it's difficult when it's so strong and it's not really pulling back, because you don't want to get caught at the top of the market for sure. All right, euro yen. Now the lines have got in, the one that we're moving back below is a monthly level. Historical level from about 1989, I think. And once we closed above that last week and it was a support on Friday, it's not getting support any longer at the moment from that monthly level. So the weekly chart, we are probably just having a week down. So we're coming down now, back to the monthly chart. I think that we've got some more monthly levels somewhere. No, these lines must be from a lower time frame of the day chart. So we must be coming down. That's the monthly level at 162.42. That's a daily level, and this is a weekly high over here. So at the moment, we're maybe just having a week down. So I'll be monitoring this range. 62 levels in between your daily level of support and the weekly level. The bigger level of support is this weekly level one here. So you may be inclined to trade down to that area because on the 4-hour chart, we are seeing, a downtrend in play. So I think until we get to the 62 level, or at least test the support level, which is last month's high here at 160.84, the most recent 4-hour downtrend range, we're at now the 127 extension. So you want to watch for a rally within the 4-hour structure to see if maybe there's an opportunity to trade down to the areas of support. So that to me would mean that this needs to rally back up to, say, the 62 level. And, in that region, we have the monthly level of resistance that were false breaking. So from 162.40 up to 162.67 would be a good area to watch, assuming that this is a low, but you may need to drag that fib down. So at the moment, if you're wanting to engage, I think you need to look for a rally on the 4-hour chart in line with price now retracing back down the range towards the 62 level and the weekly support level down in this area here. 62 levels at 160.21. Weekly supports at 159.75. Again, we're close to the low of the move at the moment. I don't like to get caught trading at the lows of moves or at the highs of moves. I'm having to wait for some form of retracement and a setup. All right, euro pound, still struggling. It's trying to go higher, but this area right here is the area where the market's really struggling at the moment. Even though this is holding to an uptrend, it's actually higher top, higher bottom, higher top. This area here is where the sellers are managing to defend the market at 87.54. All right, so a bit of a triple top down the far, and we move to a lower point. So I would want to look for, if I wanted to trade down from the failure that we're seeing up there, that area, which is really last month's high up here, 87.54. So it's really struggling at last month's high. Are we dragging the fib down and waiting for the rally? Be great if the 62 or the 79% level. It'd have to be the 79% level now because we're moving down. You know, if that 79% level could overlap up there and then we get a rally back up, that would be awesome. But I would just keep dragging the fib down and look for a rally retest of this area up here, the 87.54 area. All right. You know, if you're trading this pair once, twice, 3, 4, 5 times at least, it's tested this area, and you just used a 100 pip stop for a positional play. Yes, it's been trading through about, I don't know, no more than 20 pips. You would sit trying to trade through and false breaking, and you'd be short at the moment in profit. So if you're able to just step out a little bit of the confident zone and use a large stop at an area that you can quite clearly see is holding as resistance at the moment, give it a wider stop so the market can ebb and flow around the area, then you'd be in profit at the moment. And we may be, you know, we may not go back up for a retest. So trading at a level that you keep seeing getting hit, because right now, if you wait for the retest may not come. All right, that's my thoughts on the euro pound. Pound dollar going up like the euro dollar, but it's nowhere near as strong because the range that we're heading back up within the larger range, we're not to the 50% point yet. So this is a lot weaker than the rally, the movement up within the range on the euro dollar. All right, so we're obviously coming back up. We're actually in a weekly uptrend here now, whereas we don't see that on the euro dollar. So, but of course, it's slightly different. It's not moving up as strongly in terms of the larger range, but the weekly trend has changed within the range, within the larger range. So there are some differences, but not heading up as strong. And this could be coming up to this weekly area up here at 126.79, after now moving above the January high area of 124.48 through here. So that's the area that really should hold now from a bias perspective if we're moving much higher. So it's worth keeping your eye on 124.28. We just closed above there at the end of the week. And now we're moving above a few daily areas of resistance. We're coming up to the next area. So, you know, again, if you're wanting to get long, you have to get long at the top of the move, which is not ideal. And you're getting long at an area of resistance, which is not ideal either. So in any form of trading at the moment, you want to look for some form of a dip. You don't want to be trading at the top of the move. You don't want to be trading into resistance, which is only 12 pips away. All right, so still a bit of imbalance there. Didn't fully completely imbalance last week. He did fill the job figure imbalance. Now at the moment, the fact that we've broken above last week's high, which is 125.06, you want to look at 125.06, I think, to 125.00 if you want to look for an opportunity to get long. Look for that area to be intraday support at the moment. So T50-minute chart. You know, today we haven't been able to get down to the central pivot point. We haven't even been able to get down to the figure of 125.00. So that's the area where support is quite clearly coming in. early Asia. So that's the area to watch if we pull back today to maybe get long for then the opportunity for price to move up and break above 125.47. All right. Again, you know, you don't want to trade so high up here, the top of today's move, only 12 pips away from resistance. You know, even from this level of support that's holding today, there's only 40 pips between support and resistance. So you want to try and get long close to support here so that you can be at break even when you're retesting resistance. And then can we break through resistance? If you can't break through resistance, then you have to take profit within that 40 pip range. The market may just want to stay within that range at the moment until we, as I said earlier, we have the FOMC meeting minutes coming out in the morning. The market may just stay between 125.06 and 125.47 until then. Traders may not want to commit to the next higher level. All right, Aussie yen. Now, if you're catching my weekend analysis video, just head over to my Twitter account for that. I did say watch this area on the weekend, and we did hold there yesterday. We retested it yesterday. So that area that I'm discussing now is the monthly high over here. And last week we actually failed at two monthly highs, this monthly high here and this monthly high here. So we could be forming a reversal long term. We'll have to wait and see. Could be forming a double top up here. Most definitely pairs to the US dollar. Sorry, pairs to the yen are getting weaker. I'm just now reminding myself I just missed the pound yen then, so I'll catch that up in a moment. So as I say, we're seeing weakness on the euro yen, we're seeing weakness on the Aussie yen. So that means that the yen is getting stronger across the board. If you've been watching the dollar yen, that's been moving down in line with the US dollar weakness. So, I mean, we could be putting in a long-term high up here, put in a minor lower top starting to form yesterday when we retested monthly resistance. And we're holding today maybe on weekly support. So we're kind of trading between the monthly high and the weekly high. All right. And there's not much room to support, so you don't want to sell in support. Really, yesterday was the key level to watch yesterday. All right. 4 hour. It's kind of rejecting maybe on the 4 hour. My time is 7:25 here. When it gets to 8, this 4 hour candle is going to finish. Tomorrow, I'm going to take you through the 4 hour entry method. But what we may see today is by the close of the 4 hour candle, this could have rejected, and a 4 hour entry would simply be a break of that candle to get long, to trade up for a retest once more of monthly resistance, putting your stop below here. All right, so at the moment, we're holding on weekly support. Are we trading back up to monthly resistance? All right, it's unlikely to break this level of support ahead of, I think, the FOMC statement. All right, so personally, I would much, because of the failure up here at monthly resistance and here last week at, look back to the day chart, sorry. All right, get my software to work. You know, the fact that we folks broke 2 monthly highs last week and we further declined this week, I would much prefer to be looking for a shorting opportunity on this pair rather than getting long. So the best level would be to watch, you know, we could stay range bound within here. We could simply have a bit of a rally within this small range, the 50-minute chart. And you could look up to the 79% level of that range. I see an imbalance over here from yesterday that's not being filled. So with seeing that, I would rather then draw my fib from yesterday's high down to the current day low. Then the 79% level is here at daily resistance, 97.57. And if price was to get up there, we will have then filled in this imbalance here. So that technically is a much better area to look for a short if we get a rally. All right. Now you could be looking for a long down here. You can see it is getting support down there at weekly support, 96.91. Just depends which side of the longer term equation you're looking at on this pair. I mean, maybe we're moving higher for the next 2 months, and that's support for that next, for the next move up. But last week we did, folks, break 2 monthly highs, one of them being last year's high. So they probably have more strength in the weekly support level, but time will tell. So I'd be much more inclined to look up to sell a rally at the moment. Aussie dollar, it's breaking out of the weekly range that I've been monitoring, and which was, I get my drawing tool to work. Sometimes it doesn't want to work for some reason. All right, just bear with me a moment because now my tool's locked up and doesn't want to work at all.